Ring, ring, ring. Hello, priest. Happy Sunday, everyone, and welcome back to the magical Crowns Crypto Cave.
Well, welcome back to Krown's Crypto Cave. A nice and dark and gloomy Sunday morning over here from Chicago, Illinois, but actually I quite like it right now because it set the mood, and today is a Sunday, so we're going to be talking about some long-term and short-term analysis. Also, because it is Sunday, it's actually the last day of my sale, so actually I want to talk about that right now. Let's get in a live stream right here, and with that, I'd want to flash the code as well. There we go. OLD20 is the code for 20% off of any one of my programs for all of the payment plans, which go out all the way to 10 months. I really want to make sure that people don't feel under pressure when this is like coming into the last day, because I know that can be like kind of a fucking tactic or some shit. Make sure that this is applicable to you first and foremost. These programs are very much in depth. They are 35-hour plus longs each, except for the Joule indicators, just the technical analysis program and the options program. Those are the two big ones, and those are really designed for people who are more dedicated to learning this as an art. Typically, people who want to do this as a profession. Typically, people who want to do this as a lifestyle. So I want to make sure that that is very much clear, because it's up to you to make the final decision. Of course, read the reviews, ask me if there's any sort of points of clarification that you need. Of course, want to make sure that's a good fit, but keep in mind that these are very, 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 very long and in-depth programs, and of course, a massive financial commitment as well. So make sure that's a good fit first and foremost. And again, at the end of the day, I'm not here to be your dad, but make the best decision for yourself. And if in doubt, just reach out. Nice. It rhymes too, so you know that's true. And wow, just 2 in a row. Holy shit. Anyways, I should quickly explain them. The Technical Analysis Program is the all-encompassing technical analysis program that goes not only over just technical analysis, but also risk and position management, also understanding underlying market dynamics, and then of course access into the members' private Discord community, plus access to proprietary indicators. That again is a 35-hour plus long program, and make sure, really make sure that you take advantage of the free content first. I have a Technical Analysis 101 playlist that is kind of set up to be a little bit of a prelude into something like this. It's really basic. It is the beginner of beginner stuff. There's a few, little bit more in-depth strategies, I suppose, in there, but for the most part, it's very basic. So if you go through that and you're like, this is not interesting to me at all, I don't like this, then the program's not gonna be a good fit, of course. So I always suggest going after that first. And for the options program, it as well is its own 35-hour plus long program focused just solely on the derivative products options, which I absolutely love. I mean, that's where I got my professional start from. That's where I used to trade on the floor of New York Stock Exchange ARCA, which was an options exchange as a market maker. And that program, again, options are like another strata above technical analysis in terms of like learning curve to understand. I think that most people readily understand technical analysis a lot more easier, if that's a good word, than options. Options have a little bit more of a steep learning curve at the beginning, but I don't want to scare you off either, because if you do have the dedication, if you do have the just the wherewithal to kind of stick with it, there's no reason why you won't be able to do it. Of course, I mean, like I always said, I think that I'm kind of on the lower side of the spectrum of learning, and while options were kind of a struggle at first, with consistent implied pressure, you will get it over time. So I also don't want to discourage the people who actually are interested in making it sound like it's harder than it is. No, I just want to make sure that people understand that options are kind of like the next step, so to speak. And of course, I do have an options 101 playlist as well. So make sure you go through that one first. Again, extremely basic. But if you go through that and you're like, this is not for me, then definitely don't go with the program, because it's not going to be a good fit. Then the Joule indicators, that is just access into the 5 proprietary indicators, of which the Joule is kind of like the king of them all. And that is not a 35-hour plus long program. It's more like instant gratification. But I also want to say for this one, contingency with it, make sure you have your risk management down first if you are intent on going into that. I know it's sexy. I know it's fun. I know it's a great indicator. I use it myself all the time. But at the end of the day, risk management is still what's going to be the deciding factor between whether you're profitable or not, no matter what sort of tools that you have. Anyways, without further ado, let's actually get into the charts now. Always weird kind of kind of selling yourself, I suppose. But more importantly, let's get into the actual charts now. But first, I would like to wish you the best of the best and the happiest of the happiest. And with that said, let's teleport in to the live scene right here. There it is. Anyways, not so much of a teleportation today, but that's okay. And let me just make sure that the bottom's actually going as well over here. Just want to make sure that this is good to go. Just 1 second as I adjust this on my other screen. And yes, there it is. Okay, beautiful. Anyways, 4 hour is the time frame that I've really been keeping an intentful eye, as we spoke about coming into yesterday's video. And the reason why I'm looking at this one is because we actually do have the golden cross presumably likely happening on the next tick, assuming that Bitcoin can close this next 4 hour dildo above 10,350 in the next 2 hours and 23 minutes and 10 seconds if you're watching this basically at the same time as me. So the thing is that Bitcoin's kind of caught between a rock and a hard place right here, right? We have this resistance right here that you can just kind of, imaginarily put in right around about 10.6, as you can see on this last little high. And then the support right here, more importantly, right around where the golden cross would presumably be happening. Now, here's the thing. Because this golden cross is obviously getting contested, right? We had a little bit of a try right here. The try was bought up. We get a rejection right here, another try to undo it to the downside on the last tick right here. But it has not been well received. So thus far, it does still look like it is getting play. And more importantly, what I want to see with this is actually kind of a good thing in a sense, because it's telling us that this is the area of action. If we do end up holding through here, then this is likely to send us back above 11,000 and probably like 11.5, I'd imagine, maybe even more than that over time. By the same token, if this area does fail, then extremely likely we come all the way down to about 9,700 at the very least, 97, 9,800 down here, and probably just down to the prior low at like 94, 9,500 anyways. So that's a thing, is that when you see a lot of price action being gathered upon a singular place, then the resolution of that place is likely going to lead you on to the next phase, which the next phase here, if we go to the higher time frames, maybe go over to a daily right here, put back on the drawing tools, you can see that we're just in one massive descending triangle, right? Which is typically a bearishly resolved pattern. And we do see the bottom support of this formation coming in right around about 9,400, which is synonymous with the 382 Fibonacci retracement from the ultimate high to the ultimate low of the past market cycle. Let me just make sure that I'm actually recording. Okay, I am recording. Good. Happy to see that. there's been a lot of retrials with that lately, especially too. Anyways, with regards to that, if we do break this out to the downside, then actually there's going to be some pretty massive downside targets. Technically, a measure move all the way down to about 65, 6,600 down here, but there likely would be bounces along the way. I'd be looking at 8,900 first, then the 200 exponential moving average right around 8,500. Also, the gap fill on CMEs from 13th of June, and we do have the 200 simple coming in around the mid to high 7,000s. And then, yes, if that one fails, I'd be looking for the full measure move to be fit down all the way around over there. And of course, because this is an ascending triangle, I mean, it is appropriate to show that the volume signature on this is still very much consistent with what we're looking at, and would imply resolution in middle of September-ish region, of which we are rapidly approaching. Actually, in fact, 1 week from now, we'll have the date that I've been kind of suggesting we likely have some movement predicated upon. Not only that, but apex on this actual triangle itself coming in early October, which would, again, suggest that we get pretty damn full around this middle of September region right here. So that, to me, is going to line up with around September 15th to September 20th as a date range for massive movement, potential resolution of this formation in general, as we not only have both these things coming in, but we also do have volatility metrics rapidly declining as well. So this is a mean reverted indicator, meaning that it is designed to collapse on itself, after when things go into consolidation, which is exactly what we see right here. But that also means that it is set to expand at some time as well. And when we do come down so far, the only way after that is up. And of course, the last few times that we gotten like super low, even anywhere near where we are right now, was back on over here in May before this massive breakout from 5,000 to 9,000, and before that was 3,900 before this breakout from this region. I mean, basically all the way up to where we are now, in a sense. Anyways, my point is that all these things kind of align with the same date. Not only that, but macroeconomic events coming into the play as well, as we do have, I believe it's either the 13th of September or the 15th of September, where the Fed will meet to discuss interest rates. Now, the consensus right now and the expectation, more importantly, is a cut of about 0.25%, which, if anything other than that happens when it actually gets decided, then we should have, then we actually will have something out of the ordinary happen with price action. So let me explain. When the expectation is 0.25% down, and we cut it, and like let's say they still cut the rates, but it's not as much of a 0.25%, then actually I would expect Bitcoin to go down based upon that. And by the same token, if they actually end up cutting it by more, I'd expect Bitcoin to go up. This expectation is already priced in, is what I'm getting at. I mean, it could also be that they don't cut them at all, and of course that would likely force Bitcoin down. But you'd have to be looking at this as a descending triangle, you know, with all these metrics kind of converging at that same area, and look at that as a likely catalyst for you know, for what's coming up here. With the expectation already being kind of priced into the upside, it does make this a little bit more of a scary endeavor. Now, of course, after that, we do have the 23rd of the 23rd of September, where we have good old Daddy Backed coming into the market, right? And Daddy Backed is, you know, most people are presumably saying that that's going to send Bitcoin to the fucking moon. Well, I would say that longer term, Daddy Backed getting into this market is a good thing. It builds up the infrastructure for the space longer term. It kind of tells me that this is going to be a, you know, legitimized space in the traditional world. We're just basically going to combine Bitcoin into there as I cough up my fucking morning water. It's actually been a week and a half or 2 weeks now of no coffee, and I feel pretty damn good. Anyways, don't know why I just said that, but you know what? Might as well tell people. It actually does feel pretty damn good, to be fair. But the first few days were absolutely beautiful. Not beautiful, brutal. Fucking brutal. Oh my God. You probably noticed me really struggling for words earlier this week. Well, I think that was kind of the reason why. Anyways, the 23rd of September, we do have BAT coming into the market, right? And the expectation, which again has been priced in because, you know, people have been knowing about this for fucking ages now. I mean, nothing's really changed with the actual information of what's going on here. And that means that people are making decisions based upon that information for that time as well. Well, we kind of, you know, we had to run up into this now, didn't we? And more importantly, coming into the actual debut of it, typically speaking, when you get events like this, you get event psychology, which means that big market movers will buy up the price action to create the illusion of just massive bullishness to get the public in like a hysterical kind of route. And then once the event actually happens, and you know, I mean, it's just another exchange offering Bitcoin. You can trade Bitcoin on another venue. Is it good long term? Yes. Does it change anything in the present term? Not really. So, you know, now those big market movers have liquidity to dump into, and then the retailers who get dumped on, they feel like they're justified because it's like, oh man, well, I just bought the fucking dip right here, baby. Holy shit. # investor. It's like, what the fuck? No, # wrecked. And a lot of the time, that's why you see sell-offs kind of predicated upon those events. Like for example, when an altcoin gets listed on a new exchange, right? A lot of the time, it'll pump up going into there. Once it gets listed, boom, drop it. Why? Because nothing's really changed. You're just on another exchange. That's all. You know, you have more access to liquidity. And again, you know, longer term, it is a good thing, but it's not like the solution to the world's problems. Not only that, but well, yeah, we can just leave it there, actually. I want to talk about some more price action. So let's go back down to the 4-hour, and this is why this cross is so important to me, just because if we do get the 4-hour golden cross, and I actually really want to speak about this for a little bit here. We're going to do a dissection into this, or do I want to show my positions first? Yeah, let's show my positions first, and then we'll talk about it. Okay. Cool. Options, I'm short the 10,000 strike, the 10.5 strike, and the 11,000 strike. I'm running a P&L of 0.69 Bitcoin right now. This cover right here was actually predicated upon my first position that I had coming into, I believe it was Thursday or Friday. I believe it was Friday, early Friday morning, right? I was long coming into that day. I was looking at this price action right here. Right around 10.7, and that was kind of my this area right here. And I said the second that we violate this area, I'm getting out of my position and I'm going to reposition lower, so probably around the 4-hour golden cross, potential golden cross coming in. And so what happened was I took profit on that position. I slammed those out of the money calls for premium, and then once Bitcoin price action came back down, I started to cover once again. And once it actually came all the way down here, I bought in this region right here at around 10.250. So I didn't get the ultimate low, but close enough is close enough. And you know, it's not like trying to be perfect. I mean, of course, I want to try to be as perfect as possible, but you know, as a trader, it's not always going to be perfect. Anyways, my point is that looking at this right here, I re-added that position on, so I put on a fresh position. So I took profits on the December futures on that drop, and then sold the calls for premium, and that allowed me to buy once it came back down and still be kind of in like a riskless position. As you can see right here, I'm still in, you know, decent enough profit for right now. And looking at the average price of this was done if we were to look at spot somewhere down around this 10.250ish region. So the reason why I like this trade isn't because it's 100% guaranteed to work out. I'm not like 100% fully convinced that we're going to the upside from here, but I do think that it's worth, some risk on. The reason why I say that is first and foremost because I was able to take a nice trade here from about the same positioning coming in from the week prior, and then once we came back down, slamming those calls gives the premium to me on my side, which allows me a little bit of a leeway to kind of put on position here, and maybe even take a small loss in that position, but still gain overall just from the premium on those calls, because we know, and here's a key point, if this area breaks, again, being predicated upon the fact that a lot of wicks have been gathered within it, and we do have the golden cross, which I'm going to show in a bit, has some pretty massive implications with the price action, historically speaking, that if we break to the downside, then none of that's going to be happening. So I don't have to risk all that much for my entry. I mean, shit, in this case, I might even get a chance to get out at break even, but I won't have to risk all that much for my entry to figure out if this trade's going to go, going to actually shoot through here. And the second that we actually start opening and closing 4-hour deltas below this area right here, the 200 exponential moving average, or even just closing if I want to be a little bit more conservative, then I'm happy to close this long position. I might even still be in a little bit of profit on this one, and then those short calls will still be working for me, so I'll still be making money off that, regardless of whether I take a small loss on that spot position or not. And this is the kind of trading style that I love, just getting in as close as you can to the area that I'm going to be managing risk on. So that's essentially what I'm doing here. Again, not because I 100% believe that this is just destined to go to the fucking moon. It's more so just because I like that we're on a massive pivot point right here. Point I do like, though, again, we get a lot of wicks kind of accumulated within this region, which tells me that we do want to play off of it. And more importantly, historically speaking, we have seen that this has had a pretty massive implications with price action. Now, I'm just going across all the different exchanges. We definitely do not have the golden cross as of right now. The 50 is still below the 200, but it's damn close. And I would say another couple closes above, and we probably do get the golden cross. Anyways, if we go back into the history of time, into the last general upwards market, which this right here is a general upwards market, right? We see a few things, and actually I want to do a little bit more of a deep dive into it this time, so I will be presenting a few new things, and then yeah, fair enough. Anyways, let me scroll back on over to our last general upwards market, which was from end of 2015 to beginning of 2018 essentially, and let's just go back to the flippening of it, this massive move that we see off the lows right here. Yeah, this parabolic rally right here gets us out of the bear market, and then long form consolidation before the next major move. Anyways, we do see a very lovely interplay between the green and the purple moving averages. We're going to refer to that as golden cross and death cross, the green being the 50, the purple being the 200, and the white is the 200 simple, right? Okay, so what we see here is after this first major pop, we get our first death cross, we get our first golden cross. In fact, actually, let's go back down to the first golden cross right here. This first golden cross, pops up, and how much of a percentage gain do we get to the next major high? About 100% gain done over the course of 82 days. Pretty fucking good. Then we get our next death cross and golden cross right here, which kind of marks the next sort of phase within this. And then more importantly, you do see that once these two moving averages get above the white 200 simple, that's when things really start to even out and start to accelerate once again. You see it the whole way through. As long as we're kind of, snaking around between each other, there's not any real momentous place to be had, but there is, consolidations to get into, but it's more of an accumulation time rather than looking for the trending move. Anyways, from this golden cross to the next major high, what do we see? Another 100% gainer done over the course on this one, about 124 days, you can see. And then after that, we go through another little bit of drama right here. Death cross, golden cross takes about 2 to 2.5 weeks, it looks like. And once we get the golden cross, when we get both the green and the purple above the white 200 simple, that is when Bitcoin just starts to crawl its way up to the next high. Another 100% gainer right there, not bad. In fact, actually, this, another 100% gainer over there, about done in the same days. Then we get another death cross, golden cross, about a week and a half apart from each other. And from golden cross to next major high is when we see about a 55% increase in price action. So a little bit of an outside to the downside, but more importantly, once we get the green and the purple above the white 200 simple, that's when things really start trending here. Anyways, same thing right here. This next segment, death cross, golden cross, about a week and a half, 2 weeks apart. Then massive move of about 170% to the upside. So that kind of makes up for the for the last less fabulous move that we saw. Jesus Christ, can't believe I just said that. But 69 days on this one, so it's really good. And then same thing right here. Death cross, golden cross takes about a week and a half on this one. We get above the white 200 simple a little bit later, and trending move emerges, and we see a gain of about 105%. Not bad. Then this one right here, death cross, golden cross, about 2 weeks apart. They get both above the white 200 simple right here, acceleration is initiated all the way to 20,000 from that price point, and we get a almost 400% increase in price action. That's obviously the high of 20,000 bucks. Not necessarily expecting that to happen, on every golden cross in the 4 hour, of course not. But I just wanted to show that because if we do get this going on right here, that actually, I would generally just want to be long, riding the trend once again. But most important, maybe not most importantly, but as we showed before, it's not until both these moving averages get above the white 200 simple where we do see the actual trending move emerge. So we need two components here. We need both. We need first the golden cross, then we want to see those moving averages get above the white 200 simple. That's when the trending actually does occur. So for right now, we're still consolidating. Obviously, I myself have been saying that we likely we likely do this until middle of September. Doesn't sound like too crazy of a thing to say now, but during July, August, it was still like a month and a half, 2 months away. So now it's starting to be vindicated, and I do think that it still plays out in that fashion. So, a couple things going on here, of course. If we actually do break this area, then all of that goes out the window. And like I said, I'll be targeting a move at the very least down to 96, 9,700 down here, maybe even 94, 9,500. And that just makes this whole thing look like a descending triangle that's probably puts us around the resolution time to the downside, which, if we're approaching September 15th and we're still down here, it's like, oh, fuck, man. God damn, that's not where you want to be. You want to be towards the resistance if you want to be bullish on this one. But yeah, that's essentially what I'm looking at in the lower time frames. For that next sort of move to the upside. Of course, we should just briefly go over the lower time frames, I suppose, and talk about supporting resistance. I haven't even looked at I haven't even put these on really, but we have like an obvious horizontal right here. We have an obvious horizontal right here. These are kind of the more interim, the more present dangers, I suppose. Resistance right around 10,570, support right around 10,3, we'll call it, on a 4-hour total closing basis. If we do close below this area, I would call that resolution to the downside, into this target area, and to the upside above 10,570. Does that really, it does help. It's really more about the moving averages for me here, but I suppose if we could get an open and close above this area right here, that'd be good enough, or at least it'd be a lot more confidence inducing, I suppose. But right now is not, in my opinion, the time to be too aggressive with these calls, as Bitcoin's still most likely to go sideways on the lower time frames, which sideways here would be interpreted as actually kind of bullish, as it would allow the golden cross to happen, assuming that it stays within those parameters. Anyways, going over here to the daily. Oh, sorry. Actually, I wanted to talk about this for a second as well, because I got a great comment on this, and I think this accurately describes trading. So I started talking about the golden cross again yesterday, right? And I got a comment on my video saying, Krown, what's with this golden cross shit again? Don't you know it doesn't work, just like last time? It's like, this shows that you really, 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 really don't understand how technical analysis works as an edge. And I'm speaking in a more serious tone right now, like all jokes aside, right? The reason why I say that is because you actually want more iterations when you are using technical analysis as your edge, because statistically over time, that's where your gains are going to come from, not from one single iteration. So what this person was referring to was this call over here, of which, I was basically looking at this and saying the same thing. I'm generally long off that. And of course, did that end up being the right call? No, that one did not work out. That can happen. That can fucking happen. But my point is, and the thing that I really want to focus on here is that because that iteration did not work, I'm actually more intent to take this one if it does happen, which as of right now, it actually has not officially occurred. And because there's so many odds on it, probably it does make it a little bit scary, to be fair. Famous last words, right? But my point is that the more iterations, the more likely I am to be successful based upon that as my edge, assuming that the edge still works, which I believe it still does. Anyways, so someone saying that is the complete wrong mentality, because you're looking for each and every, your technical analysis tool to be infallible and never to be wrong. No, that's just not the way that it's gone, at least in my experience, man. At least in my career, that's why I always talk about a bullish and a bearish scenario, because it's always fucking possible. And as a trader, you have to be agnostic and be able to flip and switch onto that winning side without letting your emotions get into the way, which happens all the fucking time. So when I get when I get into a trade like this right here, do I get like super distraught that it goes against me? I mean, it's kind of embarrassing, of course, because I'll talk about it on YouTube and whatnot. But as a trader, it's actually completely fine by me, man. I mean, because I know that the probabilities of the next trade working out in my favor, giving that same edge, it's actually increased. So I'm actually a lot more intent to be taking it. Anyways, this one right here has not happened as of just yet. And like I said, I'd really want to see both us get the golden cross and then above the white trended simple, and that's where I'd probably feel pretty damn comfortable with holding a potential trending long once again. And as of right now, I mean, it's right there. It would not take too much to just break this to the downside and send us back down here. If that happens, then obviously this is not going to be playing out. In fact, this would be looked at as a pretty nasty trap, and getting ready for some downside after that. But we've seen this we've seen this sort of signature a lot of times before in price action, right? Where we get a very, very nasty downwards move. I mean, we even printed a massive bearish engulfing doodle on the daily a couple days ago, right? But no follow through, and with already 1 day of no follow through in the next, and today trying to get follow through but not getting there just yet, I would say that that does kind of make me a little more optimistic with this. Like I've said, we've seen this many times. We saw it right here, massive move down, no follow through as we kind of grind out the low, reaccumulate, and then move up. Same thing right here, massive wick down, no follow through the few days after, just goes sideways, then reaccumulates and goes up. Same thing, I mean, back down around here as well. Just no, I mean, we even get a little bit of follow through on this one, but no closures as follow through, which is more important, of course. And what happens after that? Floats upwards and onwards. So I would say that I don't look at this as just a death sentence right there. We're still a little bit farther away from resolution than I would expect to see something like that really have massive implications as of right now. Not only that, but we actually do see the yellow 21 exponential moving average. Do I want to say this? Do I want to say that it's confirmed above the green 50? It kind of has. They're way too close right now, to be fair. But if we do close, if we close any dailies above like 10.6, I think that would look pretty damn good to me. But obviously that's still kind of far away right now too. Looking at daily oscillators though, daily SOAK still very much to the upside, although weakening. To be fair, they are weakened here, and we do see daily RSI. Is it still maintaining above the bearish control zone? It is. So we are still rejecting that. We are still holding above the exponential, more importantly as well. And daily Joule actually right at resistance as well. So a little bit of a kind of mixed signal behavior here, but that's what you'd expect during sideways action, right? As this really tightens itself up over a long period of time. And of course, my thing is that when you're above all major moving averages like this, I can't be bearish. Let's actually look at these simple moving averages as well. I'm curious what they're looking like. Actually, we'll keep the 21, but I do want to check out what the simples are doing, because this is best for direction, and I'd imagine that they're going to be all flat or kind of in the same area, and they are. The 30 simple actually has a pretty negative slope, so that is concerning, to be fair. If that crosses the downside of the 21, I don't know how I don't know how optimistic I'd be. But for right now, okay. Yeah, okay, okay. It's just telling us that we're basically going sideways. I mean, it's not really telling us anything, but that's what you expect from the simples during a long form consolidation. They're going to be a little bit better for the trending moves, whereas the exponential is going to be better, for mostly everything else in my experience. Let's go to the 2-day. What's the 2-day doing? 2-day is above all major moving averages as well, as you can see. We did have a little bit of a test down to the red 10 symbol yesterday, but more importantly, all these major moving averages, once again, converging on the same area. So we know that this is a major pivot for the market, right? Again, all the major moving averages coming in this region. We have the horizontal supports, just all these sorts of things lining up with this area. So I do believe that we see some massive price action predicated upon this region. In fact, even without breaking the overall formation, we could have $1,000 move. I mean, if we break this to the downside, we're likely to have $1,000 move back down here, maybe a little bit less than $1,000. And if we break to the upside, we're probably going to have $1,000 move to about 11.5. So I guess a little bit more than $1,000 from here. But looking at 2-day oscillators, 2-day Stokes coming up from the same region that caught the last major move from 30th of July for about $2,000 from 9,500 all the way to 12,100. Then we have the last cross from this region coming in all the way over here from February of 2019 at around 3,300 before this massive switch up here, that first higher low. So pretty damn important stuff actually. And not only that, but 2-day RSI is still maintaining the exponential. Really don't want to see it break it on this next tick, but as long as it holds it up, fine. I would look at that as a more positive thing. So just kind of doing some more mental masturbation right now. 3-day chart. Are we closing today? We are not. Are we? Where's my fucking phone? It is the 8th today. Yeah, so we're not closing today. Got to wait until tomorrow at 8 p.m. Eastern time. But right now, 3-day still above all major moving averages. Looking to me like it wants to hold above the red 10 symbol. If it can, that would be good. I would be looking for the 3-day Stokes to really start to gain momentum away from each other. That's going to be key on the next tick, if we actually gain momentum away from each other or not, as it's still extremely weak. And 3-day RSI still below the exponential. This one does kind of set me off a little bit. I don't like this one, actually. Did break out of the falling pizza right here, but I don't like how it gave up the exponential immediately after that next test. It does kind of make it a little bit of an alarm bell for a potential, potential false breakout, as I'd want to see it maintain this and then get shoved up to the bullish control zone. We don't have that right here, unfortunately. So again, the stakes are quite high with the areas that we're at right now. And in Bitcoin, even without breaking the overall formation, can very easily have a $1,000 move here. The problem is that if we have a $1,000 move to the downside, that really starts to make everything else look pretty damn bad. And would really start to imply resolution on the whole to the downside. And we can talk about all those very, very nasty targets to the downside. We never talked about the targets to the upside, though, which we could basically make the same sort of targeting area as far as I'm concerned for Bitcoin, which would technically be anywhere above this 0.5 Fibonacci tracement, also aligned with this ascending trend line right here. And that would kind of suggest a target around 14,500. Now, the thing is that I actually wouldn't look at this as a good resolution center. I would look at this as a potential fake out area. In fact, I need to see a higher high above this guy right here at about 12,000-ish, 12,001, 12,002. If we could do that, that would be good enough for me. I wouldn't just even be targeting 14,500 after that. I'd probably be targeting like 16,000 realistically over a more longer time of period of time, as I've just struggled with my dyslexia once again. So hopefully this is audible. Anyways, so we looked at all of that. We do have a weekly closing today. The thing is, I really want to see the weekly close above 10.5. If we can close above 10.5, that would put us above the red 10 symbol, and that would set us up coming into next week for a move, I think, up to about 11.5, maybe even higher than that, and really make this whole formation right here look like an ascending triangle, which would be a much more bullish look on this, and make me, a lot more optimistic for, for some sustained upside, like an actual trending move for the upside. But as it stands right now, closing below the red 10 symbol here, to me, looks like we might be setting up for a potential massive dump coming into next week. So that's why it's not conclusive in and of itself to close below the 10 symbol on this next one. The problem is that we've already seen CMEs and GBTC close for their weeklies, and they have. So this is CMEs right here, clear rejection of the red 10 symbol, and where's GBTC? Yeah, GBTC 1265, same thing, right? Same thing. In fact, GBTC less relevant, but CMEs will be opening up later tonight at 8 p.m. Sorry, not 8 p.m., but 6 p.m. Eastern time, right? And the thing is with this is that this next open is actually, I think, going to be pretty damn insightful to where we actually, play this next move. If spot prices are actually trading above where CME's closed on Friday, I'd be looking for this to probably work its way upwards and onwards. We do have a nice little gap here on the daily coming in right around 11.8. By the way, this is something that oh my God. Oh my God. I see so many people talking about fucking gaps all the fucking time now, and it's great. It's great. Gaps are real. Gaps are tradable. Gaps matter. Yes, your gap matters. My gap matters. All of our gaps matter. Everyone should get their fucking gap filled. You know what? Gaps are what you should want in your life. Let's get some goddamn gap fill over here. Maybe have some more gap fills in your life right on over here. There you go. Anyways, my point is that when it comes to gaps, unless you see it on a fucking daily, it's not that relevant. It's really not that relevant. The reason why I say that is because when you go back over it in history of time, just think about it yourself. Just think about it this way. When you go back in the history of time and you're looking at these charts to see if things are filled or not, what time frame do you use? Do you go down to a fucking hourly? No. Stop it. Just fucking stop it. We did fill the gap to the downside right here. That one's already been filled. We have gotten the bounce off that. That's another reason why I bought this position right on over here. Just simply buying that area. It just so happened to be aligned with the 4-hour potential golden cross on the line as well. So it's likely to end up at the very least a decent scalp trade. Anyways, if we see spot prices opening above where CME is closed on Friday, I'd actually be looking for this to likely go up. If we see spot prices opening below, are trading below where CME is closed on Friday, then I'd probably be looking for this to maybe have a quick move back up to like 10.3, 10.4, and then probably have continuation down here towards 9.5 region once again. It would look pretty damn nasty, so I would keep an eye out for that, and of course mind the fucking gaps, right? Anyways, of course the only gap that we actually still have on the board is this guy right here. I know a lot of people are calling this gap right here. No, it is not. That's just fucking silliness. Motherfucker. I don't know why I get so on edge about this. I must be truly autistic to let this bother me. So I do apologize about that. It's probably annoying as fuck. But for whatever reason, these things have just become a fucking meme. And it's sad to see because they're actually like very legitimate. It's just people think of them as like just the complete fucking wrong way. Anyways, so yes, if we did break to the downside on this whole formation, 8,500 will be likely a nice bounce area. The problem is everyone's got their eyes on it, right? Anyways, okay, cool. So yeah, that's kind of what's at stake for the weekly. I do want to see the weekly close above the red 10 symbol. If we see that, then I'd feel a lot more confident about calling a move to 11.5 coming into next week. Put us at the top side of the triangle, and that'd be a lot more interesting, just because it would confirm this as hidden bullish divergence here on the weekly, and I'd be looking for another test back into the lower edge of the bullish control zone at the very least. So not only that, but now let's start to get into the more higher time frame type stuff. Actually, before we do that, let's go check out the fear and greed index here first. We're ticking out at 43 right now, so we're still in the fearful zone. Actually, it's a little bit more neutral than anything, but technically in the fearful zone. More importantly, we've stayed in the fearful zone for like a couple months now, like a month and a half now. It's kind of a long time, especially when Bitcoin really hasn't even started a downtrend just yet. Yes, we have lower highs, but we also do have some higher lows as well. I mean, it's not, it's I don't think it's like fully, I wouldn't be like just fully conclusively bearish just looking at it. We're still coming off a macro uptrend, so fair enough. But more importantly, if you're looking at this from an actual technical analysis standpoint, now we're putting Bollinger Bands on this, it's actually working with it, and it would suggest that we do have upside pressure here. So if we're going to look at this and then see a correlation coefficient on it, which shows that we're pretty damn correlated, then we would expect that price action likely goes up to follow that. Well, it's like which one follows first. It would just suggest that we have more upside potential based off of a sentiment indicator. That's essentially what it tells us. A secondary consideration, but a consideration nonetheless. Let's go check out expected moves on the daily. And expected moves showing a range between about 10,150, or is this 10? Yeah, about 10,150 to the downside and 10,600 to the upside, of which we already tested the upside and pretty much the downside as well. Doesn't need to be perfect, just needs to be good enough, I suppose. And this one getting caught in the spanner right here. The thing is that with the expected moves kind of angled down like this, I don't necessarily like that. Usually not a good thing, but it has certainly lost its slope a little bit. So you could say that this might just be a sloppy consolidation as well. You'd have expected to actually have fall through to the downside if this was really squeezing to the downside, which we saw yesterday, but no fall through once again. So I actually want to bring it back to the last time that I can really remember. We had one of these examples, which was over here, a good one right here. Yeah, and kind of same thing, squeezing down, then kind of flattens out, price action goes sideways and then gets picked up. Fair enough. So yeah, actually, we do have similar signatures in the past. Anyways, going back on over here, and now I think it's time to get into the more longer term type stuff. So I want to talk about this because I really haven't talked. It's like I want to talk about this. Jesus Christ, man, I'm so fucking. I apologize. What do you want to talk about? Let me know in the comments section, and we'll probably address it next video. Anyways, let's go over here to my BLX index and put on the drawing tools. This is the chart that I've referred to in the past as the matrix, and basically what we have here is each and every one of these dotted trend lines represents a support trend line for a parabolic market cycle in Bitcoin's history. You got this first one right here in 2010 and 2011 are the anchors, gets broken in 2012. That becomes our parabolic highs in 2013, 2014 right here. Then we have this next support trend line for the next parabolic market cycle anchored in 2011 and 2013 right here. That becomes, that gets broken in 2015 market cycle right here. Becomes our parabolic highs in 2017 and 2018 market cycle right here. Then we create another support trend line for this next parabolic market cycle. This one anchored in 2016, I mean, you can make this many ways, 2016 and 2012 actually. And this one I believe is more of like a phase trend line for the overall feeling of Bitcoin longer term. Whenever Bitcoin's below it, generally, in kind of an accumulation phase, and whenever Bitcoin's above it, generally in just a trending to the upside phase. As you can see, going all the way back, let me line this up. Should be aligned with this guy right here. Yes, indeed. Yeah, no, wait, it's this guy right here. Yeah, there we go. So So when we're below it, great time to be an investor and great time to be a seller on that trend line. When we're above it, great time to just be a buyer generally. So more importantly, you do see that from 2011 to 2013, when we were living below it, well, what happens? We actually break above it and boom, parabolic once, parabolic twice, blow off your top, putting that top at that next major, what do you want to call it? I don't know what you want to call it, like a phase trend line, I suppose, this dotted trend line right here. And then we break all the way back down, right? And where do we base upon? We base upon that next trend line, the same trend line that we just spoke about, the one that I think is the most important. And we base upon it literally for about 2.5 years, from 2016 all the way to 2017, 2015 all the way to 2017. And then we go parabolic once again as we hold up above it. Then we actually broke it to the downside in 2018, right? When Bitcoin went all the way down to 3,100. And we get a very similar signature to what we saw back on over here from 2011 to 2012, where Bitcoin is, from an investor standpoint, a great time to be an accumulator. And, well, you don't really get too many chances to sell it. But more importantly, when we break above it, you get the same sort of behavior. Bitcoin goes parabolic here. Bitcoin doubled after breaking it to the upside. And the most important thing to me right now is that this trend line, I do see it as a likely major support trend line for Bitcoin going forwards here. And as long as Bitcoin's above it, I'm going to generally be bullish on the macro, right? If we break below it, then I'm going to be generally bearish on the macro, but perhaps, perhaps a time to be considerate of long-term investments. Although if we were to break to the downside right here, that would be a little bit uncharacteristic as historically speaking, we really haven't, after breaking it to the upside, we typically stay to the upside for quite some time. It likes to stay up there for years at a time. And as you can see right here, it just recently broke to the upside, in fact, just a few months ago. So it would be a little bit uncharacteristic for it to break to the downside. But I would still say the same thing. If it broke to the downside, well, I can't be macro bullish off that. Anyways, this trend line is rising rather rapidly. It's currently coming in around about $9,000, and you'll notice that it's synonymous now with the weekly 21 exponential moving average, this yellow moving average right here, coming in right around, again, about 9,100-ish region. So as long as we're above there, generally okay, generally good. If we do break below there, then, like I said, that's when all those downside targets start to really make sense, and that's really when I start to switch up my whole trading regimen. But for right now, fine. And of course, this is also kind of congruent with our 0.5 Fibonacci retracement coming in right around here as well. So I do like that it matches up with other technicals. But yeah, that's a major area to watch in my opinion. If we do break below it, I would say that this is going to be described as a massive bull trap, and we probably do work our way back down to the mid to low 7,000s, maybe even 6,000s, and perhaps even beyond there. It would be quite nasty, most likely. I don't think that we just go down to like 8,500 or 9,000, just go, oh, all good, no problem there, and then reverse back up and upwards and onwards. Also, I want to show this as well. So that's kind of pointed a little bit more towards an immediate bullish case, I suppose. But again, it's still mostly sideways consolidation than anything. Let me bring this up as well. I want to just look at one major movement average. It's the green 50 exponential moving average right here. And you can't, well, we can maybe put on the 200 as well. Why not? It's always going to have some relevancy. Anyways, we do see that the green 50 exponential moving average within general upwards markets seems to be a pretty damn good place to kind of base upon. Now, yes, we do get some wicks below it. We even get some close below it right here, but we never veer too far off from it. And has been a pretty damn good support, just, historically speaking. All market cycles going back to the genesis, essentially, you do see that it gets respect. And where are we kind of basing off of, on that last major low? Well, same area, right? That green 50 exponential moving average. So I would say that as long as Bitcoin's above there, not really closing 2-day dildos too far below it, or having like any washouts below it, well, can still kind of trust it, I suppose. And it does still have a positive slope right here. So I do like that. So again, overall more good things. But like I said, at the end of the day, everything that we're doing right now is all momentum masturbation. That takes a 100% backseat to what we spoke about at the beginning of this video. That's some more actionable stuff. So yeah. Anyways, okay, cool. So let's get on and check out let's check out some fundamental stuff, and we'll talk about the monthly. Okay, cool. Let's get on to the Bitcoin difficulty ribbon. This essentially speaks to the impact that miners' selling pressure has on Bitcoin's price action. And that's less important to understand. It's less important to understand how this is calculated than just the interplay it has with the price action. And we do see that when the ribbon diverges from each other, we're trending to the upside in this case. And when it converges on each other, that's when Bitcoin is contracting in price action. That's when it goes through its major consolidations or its major downwards markets, for years at a time. This is the macro, essentially what we're looking at here from a fundamental lens. And you do see that, during this whole area right here, expand, then we contract on each other. As soon as we start converging, that's when Bitcoin starts to put in its lows and actually put in a base. And then once they start diverging right here, well, boom, massive bull market once again. And then same thing during 2014, 2015, they start converging on each other. We go through a bear market. Bitcoin breaks out of it a year and a half later right here. They diverge away from each other and trending to the upside once again. Glory times. Then more recently speaking, we do have Bitcoin converging on each other extremely rapidly in the beginning of 2019, and now, actually, funnily enough, with Bitcoin doing its recent price action right now, let me just zoom in a little bit. You do see that they're rapidly diverging away from each other, which would imply, historically speaking, which would imply that we likely start trending to the upside. Again, a little bit more of a directed thing I just said right there, but that is the signature that we do have from the history of Bitcoin. Not only that, but let's go check out. Let's go look at something that's kind of diabolically opposed to this. This is the Bitcoin network momentum chart, and this is essentially. How do we want to describe this? Well, we can just read it down here. It looks into value transmitted through the Bitcoin blockchain denominated Bitcoin value plot against Bitcoin's price. All right, fair enough. Anyways, more importantly with this, and we can just intuitively look at this right now. This is concerning. This brown oscillator down here representing the Bitcoin network momentum, that is rapidly nosediving. And if we actually create a lower low than what we saw in early 2019, then this is going to really start to look like a bull trap over here from a fundamental perspective. Now, the network now the momentum of the network, is that a conclusive thing in and of itself? Maybe not. Maybe not. I mean, this is pretty fucking experimental right here. But we do have a good signature in the past that when this thing is in an uptrend, we are generally in an uptrend on price action. When we're in downtrend, we're generally kind of finishing out the parabolic rallies. You can see it back on over here. Downtrend, boom. There's your high. You can see it right here. Downtrend, boom. There's your high. And of course, the uptrend is pretty damn easy to spot. But this one right here, if we do take out the last low, then we'll actually still be in the process of creating a downtrend. So I did want to show that something from a fundamental perspective is not looking too good right here. It would suggest, more importantly though, that what it really suggests is that this market's being run by traders right now. We're not really getting like major new inflows of capital in this market, which I would agree with. I mean, you can look at it. I mean, I can see it on my channel right now. This is one of the beautiful things, and one of the pleasant surprises that I got from doing these videos is that I really get insight into like where the kind of like general masses might be coming from. Not that like people who are watching this are general masses, but understand that you can look at the statistics for a lot of the top YouTubers like Chart Guys, like Data Dash, like Superman. Like these are the people who or Coin Mastery. These are the people who will get noticed first when someone comes into YouTube and types in what the fuck is Bitcoin, or why did I just get wrecked on Bitcoin. Those are the guys who are going to likely pop up, right? So when those channels are gaining momentum, when they're actually gaining views and gaining subscribers, it's really actually a good sign that the masses are once again back here. And we actually haven't really been seeing that recently. And I can tell you from my own channel, my numbers have been going down like phenomenally recently. And so the thing is that it actually does let you know, and that is a pretty damn good indicator. In in a sense, the channel was rapidly expanding through this region right here, and during this region contracting essentially. Same thing right here. Things very, very slow in the 3,000 level. Things very slow at the 6,000 level. But hey, man, that's why I'm kind of in like a special position, because I'm a trader, right? So I'm gonna do this. I'm gonna do this regardless, man. So I don't have a problem doing videos during this time, but I would imagine that people like searching for content and shit like that, that's going to be really fucking difficult when you go through these multi-month consolidations. I mean, good fucking luck with that, man. Anyways, I tip my hat off to you, but it's good to have a backup, I suppose. Anyways. So let's go back down and let's check out, we don't really have anything new to talk about on CMEs or GBTC. Of course, traditional markets not either. We can talk about gold for a second. Gold is interesting to me here just because it does look like we probably have seen at the very least the top of this rally. Could it be that we pop back up and maybe test like 1540, 1550? Maybe, but I do think that I do think that we have an interim top right here. We probably do go sideways for a little bit of time, sideways a little bit down, maybe back down to like 1469, 1470-ish region, and then and then try to consolidate and then work our way back upwards and always. Long term, I'm still bullish on this, but for now, it got pretty damn close to our target, not all the way there. We did get a little bit of a hunt above this false breakout right here on the lower time frames. Fair enough, and then all the way back down lets me know that's likely the area that I'd be looking for to kind of call a potential top. Anyways, let's go check out. I do want to look at traditional markets just really quick because I do want to show this. Speaking to the long-term impact of Bitcoin, right? So traditional market had a pretty damn good close on Friday. In fact, this was not what I was expecting. I was looking for a bear trap to come down to about 275 and then reverse the upside. It looks like we might do this from this area right here. This is a pretty damn good close, to be fair. And when we go down and look at this on a line chart, whoops, wrong button. Didn't mean to push that one. There we go. Let's get on this one right on over here. And we take off these moving averages, and we can actually overlay a price chart of Bitcoin, right? And we can see that these are phenomenally correlated with each other, especially on the macro, not on the micro, not on like the day-to-day bullshit, but on the macro, absolutely. Very, very correlated in my opinion. I mean, when you see these guys go up with each other, you see these guys go up with each other. Typically, traditional markets moves first to the upside, and Bitcoin moves first to the downside on the major macro. You can see that Bitcoin puts in its high first, Bitcoin puts in its high first here, puts in its high first here, and then traditional markets rally out first. So we are actually seeing traditional markets, especially on a line chart, look pretty fucking good. To me, this looks like it probably wants to get back to maybe 300. Maybe we do get another maybe we do get another bull trap here, and I finally do get that 275 tick, and that ends up being the bear trap. But ultimately, I do think that traditional markets do work their way higher. People are calling for a major, massive crash in traditional markets. I do think that it happens at some point in time, but I think that's more of an emotional thing rather than based on like legitimate things going on like right now. Like, yes, I do think that the situation is pretty dire, but do I think that it's going to fall apart like today? No, it can still be pushed down the road for a few more years. We can still go into negative rates, which I think is pretty fucking likely to happen. Yeah, as weird as that sounds. And the Fed just has a few more bullets up their sleeve to kind of deal with this. So I would say that the traditional markets being strong right here does bode well for Bitcoin, at least historically speaking. At some point in time, could this diverge and not be the case? Yes, but we have 10 years now of this mostly working out, to be fair. So I'd say until we get a case of it not working, I would still be going with it. And this looks actually uncanny here, in a sense. So I would say that keep your eye on that, and I'd actually be, and if you are a fan of Bitcoin, you're probably going to be wanting to be rooting for the traditional markets rather than oppose them, as for some reason people think that like the traditional markets being strong is bad for Bitcoin and vice versa. It's like, no, not really. That's just not the information that we have. On a day-to-day basis, yeah, they can be contrary to each other, but that's not how the market operates. The market operates on like really a quarterly basis. Speaking of, let's get to the higher time frames on Bitcoin right now, as it is again a Sunday, so might as well use the extra time to talk about long-term analysis. So a couple big things here on the monthly, right? We do have the red 10 symbol rapidly approaching the yellow 21. If we can get these guys across the upside, I would be bullish based upon that. The last time we saw that happen was back on over here in April 2016, right? From about $400 all the way to $20,000 price per Bitcoin. And just generally, whenever the 10 symbols above the yellow 21, we're trending to the upside. When they converge on each other, we're generally trending to the downside. And right now, they converge on each other to the upside. So I would say this is more positive than not. Not only that, but monthly Stokes about to get their first tick into the bullish control zone if they can just keep the momentum here. And not only that, but monthly RSI looking pretty resilient in this region. If we can actually reach back into the bullish control zone, this looks good to me. Very, very similar signature to what we saw on the last time that we had to test into the bullish control zone after being a long ways away from it back here in June 2016, where Bitcoin plays out about a 35% drop down right there, 37% drop down, and then, accelerates all the way up to $20,000. Well, what do we have on this drop back down right here? About 34-35% as well. So it's certainly within the historical relevancy of Bitcoin to do such things. I mean, shit, man, all these pullbacks that we see on Bitcoin's history, they are pretty damn similar in their in their actual result, I suppose. This one 33% down right there, this one right here down about 37%, this one down here down about 38%, this one down here about 36%, this one here about 39%, this one here about 36%. You get the idea. And that sounds pretty fucking familiar with what we're doing right now, right? With this one being down about 33%, depending upon where you kind of measure it from. Anyways, more importantly, going back to the monthly here, we do see that all things considered, that would be more bullish. That would be more positive thing and very much in line with what we've seen thus far. So if we can actually get this next tick into the bullish control zone, I'd say that is going to be not likely going to push its way through. Not only that, let's actually bring up the accumulation distribution indicator as well. I know I've kind of spoken about this week already, but we do still have a positive slope on this, which I would say longer term is a good thing. I only care about slope analysis on this, and from the very long term on like a monthly, we do have a pretty damn good history of this being right. But the problem is that it doesn't work as well in the BLX. Yeah, we have to do it on Stamp. Stamp is where it's smooth as fuck, and we do see that pretty much all the major inflection points on it have correlated with major turning points on price action as well. And right now we do still have a positive slope. That's all I care about on this one. As you can see right on over here, the last time that we got a positive slope in this region, 1st of July 2015. which called this whole move out of here, from about what, $100, about $200, sorry, about $200. Anyways, pretty damn good. And, of course, on the monthly though, if we do break structure, aka meaning that we break the low of this guy right here on July, the low of July at 90.50, likely has a phenomenal catastrophical fall all the way down to this region here. It would not be interpreted as well. Sorry, not the volume profile. I want to look at the Trollinger bands. The Trollinger bands still look to me like we're kind of setting up for a move to test the top side of the Trollinger band, which is currently coming in around $12,000. So longer term, any sort of move above there does start to really set the stage for massive trending moves back over, likely to the prior highs and beyond. But let's kind of take this out a little bit more. Let's go to a 2-month, a bi-monthly, gay for TA, and now I'm looking at bi-monthlies, motherfucker. That's gonna get cut in terrible ways. Anyways, bi-monthly right here, a little bit of profit taking off the top Trollinger band, pretty normal stuff. More importantly, two-month Stokes, bi-monthly Stokes still headed up, looking pretty damn good to me. Bi-monthly RSI looks like it's gonna have a chance to close above the exponential. If we can do that, that'd be pretty damn good. And then quarterly, which actually will be ending this month. So we get a new quarterly coming into October, right? The new quarterly likely does confirm a fresh Stoke cross the upside here. And quarterly RSI would be well above the exponential, although that's kind of unfair because it's a little bit too young for that one to really matter. But more importantly, looking at the quarterly, pretty damn stock standard stuff. Although we don't have too much price action history to really be populating here, looks overall fine. Like it. Anyways, Bitcoin rallied up $40 right now, so it's going crazy. Holy shit! Let's take off these Trollinger bands; they're getting too convoluted, and we can do a little bit more of a dissection in lower time frames before we move on. Or actually, no. Let's first look at the Bitcoin dominance, then we'll look at the top shitcoins, then we'll do that and wrap it up. All right, so dominance chart topped out as we spoke about yesterday, and coming down to the exact area that we spoke about yesterday as well. Actually, what is it? 72 and a quarter. Yeah, I think we got it. Yeah, we got 72 actually even. So I'd imagine most alts probably hit their targets. I'm gonna blindly say that Cardano hit that 450-ish region. Did we get it? Whoops, that's not Cardano. Yeah, hey, nice. There you go. 450 right there to the dot. I think this one actually even has a little bit more. Shorter term probably works way back towards 460. Maybe even medium term gets a test up here towards 490. But yeah, I do feel quite confident in 460 getting hit, and then probably does get a try higher than that over time, as we do have some nice bullish divergence most likely. Yes, major bullish divergence here. I think that this one does try a little bit of upside. So Bitcoin dominance chart finally getting that that topping that we were looking for, and now we're seeing it kind of spilling over. So this is why I was saying I don't really. It feels greedy to be bearish on alts right now. Now don't get me wrong. Longer term, do I think that the damage is over with? No, I don't think so. Longer term, but short term, probably see a lot of these guys rally as my trading view doesn't want to load this. Let's go check out the total market cap as well. I'm curious how this one's operating. If we could load, maybe. Come on, trading view. Don't do this, you bastard, you motherfucker. How dare you? There we go. All right, awesome. Getting mad at my inanimate objects once again, just showing my complete lack for social acuity. Definitely autistic. Looking at the let's go to a daily. Looking at the daily right here, looks to me like it's putting a base on the 200 exponential moving average. Not anything too crazy. It matches up. We're not really getting anything too much off this. This would be a little more of a bearish look, to be fair, but of course it would be more bearish. It's including the alts. We're in a massive descending triangle right here. Actually, in fact, this one would be looking for resolution actually sooner rather than later. Now, we did regain the yellow 21 yesterday night, and actually using this area as a pivot to rally off of it is a good signal, yes. But you can see that Bitcoin is really running this one more than anything. So I don't know, I don't know how much value there is in looking at something like this, but daily Stoke still up, daily historical volatility percentile is at a fucking piss patter. I mean, we're set to move, and this one's gonna have resolution pretty damn soon. Basically 15th of September as well, but man, this one's coming. Okay, cool. Let's look at the top two shitcoins, then we'll get back down to very low time frame on Bitcoin and wrap this bitch up. Mr. Beaterall hitting our 182 target, very, very nice. If we can see this next daily close above 184 target, if we could see 184 get closed above on a daily door closing basis, I'd actually look for this to go all the way up to 202, 205 region up here and test around the 200 simple. We technically do have a massive measure move from this falling pizza targeting all the way towards 260. Now, I think that that's a little bit of a lofty goal. I don't necessarily think I would look for that to happen coming off this region right here, but I do think 205 is very likely if we do close above about 184 on the next daily. And then if this area gets taken out, then yeah, then 235, then yeah, I'll be looking at 260. So I'll take it one step at a time. But I want to see the same thing on Mrs. Litecoin, which we'll go to right now. Mrs. Litecoin, giving another test of this trend line, but thus far rejecting from it. Same thing as Mr. Butyrol, actually. Thus far backing away from it. I need to see a close above. We can't just test it. We need to close above. But going back to Mrs. Litecoin, a little bit more pressure on it, as you can see. Let me get rid of this one. It's not relevant. Death cross below most major movement averages here. Not the best look, but we do see daily Stokes, primed. We do see daily historical volatility percentile extremely low. I mean, we just need to see just a little bit of expansion here, and I'd be targeting to move immediately towards $80 and likely massively beyond. $90 to $100 would be right around the corner if that were to happen. That's the exciting part right now, but thus far it's a rejection actually. I mean, you see a nice wick above this resistance. That's a bear wick. So yeah, keep your eyes on that until we actually close above. I would not get too excited. This one closing above, I need to see a daily total above 71 and a quarter. 71 would do it. 71's fine. Okay, cool. So yeah, and if we do close below, it's not a death sentence either, but it's not conclusive is what it is. What else do we want to look at? I think that does it. Yeah. Okay, cool. So let's get back on over to Mr. Bitcoin, go back down to those lower time frames, start to wrap this bitch up. Very, very nice and tight. Anyways, so yeah, the biggest thing to me right now is the golden cross or the potential golden cross happening. We got 1 hour and 29 minutes and 31 seconds left to go on this one. If we do close another 2 above it, I would imagine that we do actually officially get the golden cross, but I need to see then the golden cross moving averages get above the white 200 simple to be a little bit more optimistic on the whole, or price action getting an open and close above this like 10, let's just call it 10.6 right here. If we get above 10.6, that would look good to me for continuation back up to the top side of the range at like 10.9 to 11,000 region. And at that point in time, things, I'd just be generally looking for things to kind of float up and test the ultimate resistance right around 11.5. And, that's where things, we can reassess it if and when we do get there. Of course, if we shoot below this region right here, if we close a 4-hour dodo below this region, 10.3, or especially open and close below it, then I'll be looking for a move down here and probably even down here. And this is going to start to look a lot more bearish to me and start to really look like we want to crumble down. So that's what's at stake right now. We should get some movement when CMEs open up a little bit later tonight. Remember, September 15th is actually pretty close, or September 13th as well. It's either September 13th or September 5th. Let's just fucking look at it. It's going to be Wednesday of next week. September 11th would be the... Well, we got 11th. We got Wednesday the 11th, and then the 13th is Friday. The 15th is Sunday. It's definitely not Sunday. All right, so it's either the 13th or the 11th. Then it's one of these, or maybe it's the 18th. It's either the 13th or the. Oh my god, I just need to look this up. I apologize. It's either the 13th or the 18th. I'd be more leaning towards the 18th. Anyways, I'll do the research on that later tonight. We'll come back in tomorrow and get it right. But basically, middle of September is what I'm suggesting. That's same fucking thing, basically same fucking thing. Whether it's a few days before, a few days after, same thing. So yeah, that pretty much does it for this. Lower, we haven't even looked at the lower time frame oscillators. 4-hour Stokes actually just having a fresh cross to the downside right here. Not good at all. What about 3-hour? Did 3-hour come down as well? 3-hour are weakening, but they're not down. 2-hour are down. Hourly is down. So usually when I see something like that, I mean, we're probably going to go at the very least sideways, maybe even test down 10.3 once again. Again, getting wicks in this region is not a death sentence. That's okay. It's only a breakage of this area on like a 4-hour total closing basis where I'd start to sound the alarm bells once again. For right now, Bitcoin probably just more destined to go sideways within this region as we wait for CMEs to open back up, and then perhaps we might have something new to look at. But for right now, more or less the same. It's just waiting for things to kind of resolve themselves. More sideways, a little bit more better for Bitcoin bulls, but at the end of the day, still need to see major levels being taken out. Though that is the most important thing right now. So I'll leave you off with that one. I do want to wish you well on this nice Sunday. Also want to remind you, again, it is the last day at 12 midnight. The sale will be off. So if you are interested in it, make sure make sure I want to make sure that you have that information. And I think with that said, I want to wish you well. I want to wish you the best of the best as always. I'm gonna go eat a shit ton of food is what I'm gonna do. I'm so fucking hungry, man. Take care and see you soon.